So all blockchains are not created equal. It's important to say that, and purposely they're not created equal. Most of the major names that we know, the Solanas, the Sui's, the Avalanches, the Cardanos, the Algorands, are purposely built to be generic, meaning there's a token that can do or be anything that you want it to do or be by putting what I call a Jenga tower of smart contracts on top of it to make it turn into something that you want. Whether it's a meme coin or a metaverse or a gaming application, the smart contracts that you put on top of the token govern what it is. That's also true for regulated financial services. So the issue that we have at Provenance with that is smart contracts are neither smart nor are they contracts. They're just bits of code. And generally, the asset issuer or builder doesn't own that code. It's usually a third-party code. So the code that governs the smart contract for the cap table isn't owned by the same person as the smart contract that governs the capital distribution function. And when they get upgraded in the future, are they interoperable? Are they continue to work well together? Can they be hacked and steal your funds? All open questions and all reasons why I don't think a smart contract blockchain scales in the institutional financial services space appropriately, because as you have built a Jenga tower when you were kids, the higher it gets, the bigger the stack of smart contracts, the more out of date they get, the Jenga tower falls over. It's just too much risk. Provenance is built with all of those ERC 3643 type functions built within the protocol, meaning when they were upgraded holistically. They're all in an open source manner owned by the community. So you can actually see and you can test and you can audit each and every one of those to ensure that they all work well together.
All right, guys, thanks for joining. Hey, everybody. This is Mike Klein, Digital Wealth Insider. We've got two awesome guests here today. This is kind of a new thing. We've got multiple guests and very complimentary because, one of our guests here is Anthony Moro, who's CEO of Provenance Blockchain Labs. You guys may remember we did an awesome jam session with Anthony last month. And joining us, we've got Cole Snell, who is the CEO of Infineo. Guys, thanks for joining us. Thanks for being on the show.
Mike, thanks for having us. Great to see you again, man.
Yeah, absolute pleasure. So let's get right down to it, Anthony. You guys have built an awesome blockchain that facilitates real-world asset tokenization. Protocols love the technology you guys have built, and I'm looking to Cole to talk a little bit about that. Cole, you guys have a really hot protocol right now as I'm tracking your guys' TVL, which can be thought of in protocol world as almost assets under management or assets locked, however you guys want to slice it and dice it. You guys have had just a straight upshot trajectory. It's been a really impressive story. And you guys are really in a niche, I think, that most institutions understand. But I'll let you talk a little bit about that product as well. So why don't you give us an introduction, Cole, and then Anthony, you can weigh in, and then we'll just have a jam sesh.
Yeah, sure. That sounds good. And it's great to be here, Mike. It's thanks for the opportunity to kind of share about the world's largest, most solvent asset class that even institutions really don't know that much about. We think people know about life insurance as an asset class, from retail to origination to distribution. It's amazing how people even in the industry don't even understand the industry. So there's lots to unpack about how technology can make this most solvent asset class in the world less misunderstood. That's a word salad right there, which I think is probably a good analogy for the life insurance industry. But trust me, technology will simplify this misunderstood asset greatly. And I hope to unpack that with you today.
Yeah, 100%. So, when I'll raise my hand here, right? Life insurance, something I've heard about forever. I really don't understand the product that well, but I think it's very it's
no
like
one does.
Yeah, it's
no one understands it.
It's almost like crypto where people on the outside are like, is this real? Is this a real thing? And then people on the inside, this is an amazing thing. And so talk to us maybe just about life insurance in general. Why have institutions that have specialized in it or have gravitated into it? What do they love about the product? And then how are you guys kind of taking it to version 2.0?
So the people that love it get essentially the Sharpe ratio. And actually, when I first started working with Anthony, this is one of the things that he offered so much to Infineo over the years was a deep understanding. Specifically, was him and this other one of his advisors, this guy Josh, said, "Look, guys, you got to drill into Sharpe ratio. The Sharpe ratio of this asset is unbelievable." And so we have an economist in-house, Dr. Robert Murphy. He's kind of this famous Austrian economist, and he came back with an analysis, a white paper on the Sharpe ratio. And for anyone that looks for risk-adjusted, uncorrelated returns, Sharpe ratio is a really good measurement of that. So institutions that get it, say buyers of life insurance as an asset class that get it, really understand the fact that this uncorrelation, this high Sharpe ratio is something as a fixed income alternative that's really super exciting. So that's for those that get it. Even people on the distribution side of the life insurance industry don't know what I'm talking about. Buyers, institutions, generally speaking, get it. But again, they're even few and far between.
So maybe real quick, like give us a one-liner. What is the Sharpe ratio, and why is it important?
So IRR minus standard deviation is like a pretty kind of broad way to kind of define Sharpe ratio. So what that means is you get a risk, you get a very smooth, you get no volatility, essentially, is in a nutshell is what you want. So if you can get 4 or 5% smooth, consistent every day without yield curve inversion, so market flips up, market flips down, the Sharpe ratio of life insurance stays really, really steady. 3 is super, super high. Anthony, what is what's the Sharpe on like the 10-year, for example? Is it like 1.7?
I think that's what it's correlated to. So it's excess return each additional unit of risk, right? Is the Sharpe ratio from what I remember. And 0 means you're at market, and low is low risk, high is good as well.
So for somebody that wants to earn returns but not wake up and see that their assets are down a significant amount or an uncomfortable amount for them, this is a really useful tool and metric to kind of live by.
Yeah, for sure. Like even at Infineo, when we think about as we're going to market and we're offering a digitally native version of this, we think about, well, what is our story? What is the marketing? And Sharpe ratio is going to be a big part of our marketing. We want people at the water cooler, at the office, in the line at Starbucks talking about Sharpe ratio. It's an interesting conversation. Everyone deserves a high Sharpe ratio. So we're going to have some kind of in there, like, you just pass your buddy on the street, like, hey, your neighbor, hey, John, hey, the weather, blah, blah, blah. How's your Sharpe ratio? Yeah, good. It's got to get there.
You guys are the spokesperson for a financial metric. I love it.
Yeah, right. We'll see if we get there.
So you're an institution. You're learning, maybe you're familiar with Sharpe ratio. Hopefully you are. You're learning about, life insurance products. I mean, what is it about life insurance that allows this favorable Sharpe ratio, and why does it make it a really interesting product for people to diversify into or to hold?
Well, it's essentially you have a close to $4 trillion global total addressable market with no secondary trading or obviously tertiary trading. There's a small kind of fringe kind of corner of the life insurance industry that is occupied by some secondary market trading. It's called the life settlement industry, but it's very, again, also misunderstood, actually quite valuable and quite interesting, but very, very fringe. And it's a very, very small, occupies a very small percentage of the market. Or the $4 trillion total addressable potential secondary market. So, I think that's what's interesting. I mean, really, when you look at, say, a mortgage-backed security or an asset-backed security, what Infineo identifies, and again, this is something that Anthony helped us on really early to kind of identify this language, is that really what we're doing is looking at a life-backed security. This is essentially standing up a new asset class. So, is a new asset class that has all these characteristics. We talked about Sharpe. We talked about uncorrelated. Is that exciting? Is that a place to devote money to and put some capital into? I think it is, and I think it'll be really exciting. And the question really is, well, why hasn't it existed before? I get asked that question all the time, and because of the highly centralized, siloed, potentially corrupt, and I have no problem saying that, life insurance industry, life insurance ecosystem. I mean, imagine this. Imagine that since 1847, one of the largest technological advancements in life insurance, the life insurance industry, this highly lucrative, super solvent industry, since 1847 has been DocuSign. And DocuSign, as a bragging point for technological advancement within the life insurance industry, was force-fed to the life insurance industry by COVID. Essentially, everyone thought they were going to die. They're piling into buying term life insurance. The carriers couldn't get paper out to them to get wet ink signatures because FedEx and UPS were not working. They were laid off because of COVID. So the life insurance industry said, okay, we'll succumb to the pressure. We'll allow you to use DocuSign. So they spun up this DocuSign, and now 2-3 years since COVID, you go to any global life insurance event and the industry leaders are bragging about all these technological advancements they made during COVID. And really, when you peel back what that looks like, it's called DocuSign. So to say that these industries and this industry is highly gated and kept confusing intentionally is an understatement. They have been using this, highly analog approach to business as a way to keep innovation out. But finally, the technology, blockchain, this is why we use Prov Labs, and AI has got to the point where the disruption is going to happen, and it's happening, as we speak, to this industry. Disintermediating, offering more value to the end user, creating more trust, less confusion. So that's really the exciting thing about what we're doing here.
Sorry, they're really just part of the roadmap of what Figure Technologies, what Mike Cagney and Juno have done with home equity line of credit in the process of remaking that business over the years. I think something like 15% of all HELOCs in the US will be done by Figure Technologies, which is a B to C to B business, meaning you can go to figure.com and you can take out a HELOC, but you can also do the same thing on Movement Mortgage or Guaranteed Rate or Home Point. All those tech stacks run on the Figure, all those products run on the Figure tech stack, which is all built on Provenance. But the secret sauce is not anything that's very sexy. It's all back office cost savings. So they take about 100 basis points out of the process of origination to warehouse to securitization by largely taking out expenses like audit and time and cost of capital. And Infineo is doing exactly the same thing with life insurance.
Yeah, interesting. And, I want to get back to Infineo Labs, but I want to talk a little bit, Anthony, about, I think a lot of people don't understand, okay, like you guys, Provenance Labs is a blockchain. Infineo is a protocol built on your blockchain. How does that relationship work? So, let's say, for example, you're interested in owning tokens of a layer one, and you're looking for success indicators, aka the protocols that are built on it and the success of the protocols. Like, how do you guys choose protocols or attract protocols with rock stars such as Cole to come on board? How do you guys help them? What's the value add? And then how should you think about that if you're assessing, let's say, a layer one?
Sure. So great questions. So, taking a big step back, I think we all believe in two facts here at this session today. So first, we all believe the global financial markets are going to tokenize several trillions of dollars of assets over the next decade, right? We believe that to be true. And second, we all think that asset issuers, protocol firms, servicing firms are going to need a lot of help managing that transition, which really leads to two questions that are open and fairly open. So where and how? And so for where, we look to the TradFi networks for guidance. And we see from credit cards to custody banks to my old line of business for 20 years, depository banks. In each and every case, a global oligopoly of providers inevitably evolves, right, due to security, interoperability, or regulatory pressures. And we think we'll see the same dynamics in DeFi, where a very small number of public blockchains will be used to register, ledger, and exchange the world's financial assets. And within this construct, we know that Provenance Blockchain is perfectly positioned. It's the only major layer one that is purpose-built for financial services and already ledgers, largely thanks to Figure and Infineo and others, several times more real-world assets than all other public blockchains combined. And then for the how, we think the answer there is Prov Labs. We're building the picks and shovels, if you will, the suite of foundational infrastructure SaaS that asset issuers like Infineo can use to efficiently transact on the Provenance blockchain. Moreover, we get to leverage the roadmap and the institutional grade infrastructure used by not only Figure, but JP Morgan and Franklin Templeton and Apollo and other asset originators to help firms like Infineo fast follow with a wide range of new use cases. A good way to think about it in the Web 2 world is Red Hat and Linux. That's our aspirational Web 2 comparison. So Red Hat proved that a B2B managed SaaS and professional services firms that exclusively builds in a dominant open source ecosystem can materially scale. We think that Provenance is going to be that dominant open source ecosystem, and Prov Labs is how issuers can attach to it. So we're excited about the future. We have several other use cases that, I don't know if they'll scale as fast as Infineo has scaled. Infineo, it needs to be said, went from zero to, I think there were over 200 million in ledgered assets now. I don't think any other asset issuer in the history of blockchain, public blockchain, has scaled that quickly. And it shows the potential of how we can remake asset class after asset class. I say all the time, the revolution isn't going to come all at once. You're not going to wake up one day and you're going to have $700 trillion of assets tokenized on blockchain. The revolution comes asset class by asset class. Figures tackling, residential home equity. Infineo is tackling life insurance. We'll see which one is next.
And how do you guys attract these rock stars, Anthony? For the listeners, when we're assessing them, for example, at our fund, which layer wants to hold, we're looking for success metrics like, capital on chain. And then obviously, how are the protocols doing that they attract? Are they attracting developers? Like different metrics that support. And, I think Provenance Chain arguably is one of the secrets, the elephant in the room that's sort of a big secret in the sense of you guys have just kind of nailed it all fronts. And so when you're going out there and you're saying you guys should build on our chain, Cole, you guys should focus where we're at. Obviously, I want to hear from Cole, like his point of view on why they chose, Provenance Chain and what they love about working with you, Anthony. But I'd love to hear, Anthony, from your perspective, because I think there's a lot of institutions that are interested in diversifying within crypto, are interested in holding different tokens, are interested in exploring other ecosystems, and they don't really know how to think about this or even understand how these partnerships work.
Yeah. So all blockchains are not created equal. It's important to say that, and purposely they're not created equal. Most of the major names that we know, the Solanas, the Swedes, the Avalanches, the Cardanos, the Algorand's, are purposely built to be generic, meaning there's a token that can do or be anything that you want it to do or be by putting what I call a Jenga tower of smart contracts on top of it to make it turn into something that you want. Whether it's, you like that one? Whether it's,
I haven't heard that one before. That's a new one. It's good.
We've got a good visual too. So whether it's a meme coin or a metaverse or a gaming application, the smart contracts that you put on top of the token govern what it is. That's also true for regulated financial services. So in the ERC world, the Ethereum world, there's the ERC 3643 standard, the ERC 20 standard. And all that means is it's a standardized group of smart contracts that needs to be put on top of a token in order to make it function like a security. So the issue that we have at Provenance with that is smart contracts are neither smart nor are they contracts. They're just bits of code. And generally, the asset issuer or builder doesn't own that code. It's usually a third-party code. So the code that governs the smart contract for the cap table isn't owned by the same person as the smart contract that governs the capital distribution function. And when they get upgraded in the future, are they interoperable? Do they continue to work well together? Can they, can they be hacked and steal your funds? All open questions and all reasons why I don't think a smart contract blockchain scales in the institutional financial services space appropriately, because as you have built a Jenga tower when you were kids, the higher it gets, the bigger the stack of smart contracts, the more outdated they get, the Jenga tower falls over. It's just too much risk. Provenance is built with all of those ERC 3643 type functions built within the protocol, meaning when they're upgraded holistically. They're all in an open source manner owned by the community. So you can actually see and you can test and you can audit each and every one of those to ensure that they all work well together. So all that being said, Figure learned this the hard way. They've been building the protocol really for 5 years. They're doing things within the protocol that no one else is doing. There's for instance, an in-place hold module, so you don't have to use a smart contract for a bid or an ask. You can actually have your assets in your wallet, and if you're getting a distribution or a dividend, those are paid to you in your wallet, not into a third-party smart contract. They're doing things like DART, which is essentially a registrar for blockchain issuances. When KKR, for instance, buys a $200 million tranche of HELOCs in a digital manner, you can be sure that they want their ownership perfected under the appropriate UCC filing. That is done with a firm called DART, Digital Asset Registry Technologies. That Figure had to spin up in order to make this work. And then Cole and Infineo get to use a lot of this because of that. So all this, getting back to the token is called Hash. It's not listed on any centralized exchanges yet. We've announced plans to do that early in 2025. That's the reason it's not as well known, because no one's trading it. If you look at operational and valuation metrics, market cap to TVL, market cap to fees, there really is nothing like Provenance. 0.1x market cap to TVL and under 900 market cap to fees. There's about $2 million in annualized fees right now in Provenance and growing faster than any other major blockchain. Still relatively small-ish, but not that small. considering, Avalanche has got about $7 million in annualized fees. Provenance is 2. Cardano is 2. Provenance is 2. Hedera is 2. Provenance is 2. You can see that the valuation of the Provenance chain has a long way to grow once it's listed on centralized exchanges.
So intentionally purpose-built to attract higher quality protocols that are more laser focused on your guys' industry, and also to penetrate the traditional financial industry much more efficiently by building features and technology stacks that they would seek when choosing a layer one or a technology partner.
Yeah, you have to understand that the total addressable market we're talking about is $700 trillion. It's big enough to be purpose-built in financial services for sure. We don't need to be everything for everyone, but purpose-built for financial services is where we live.
Well, and of course I respect that. Cole, talk to us a little about from your side of the pond. Like when you were setting out, building this solution, why did you, what inspired you to do it? Were you Web3 native? And then how did you come across Provenance? How did you and Anthony kind of connect? And how does he support you guys? And why was it a no-brainer?
Yeah, it was probably one of my favorite questions to ask. And then people usually follow that question with, do you have a multi-chain approach? And the answer right now is no. We're on Provenance. We're in that ecosystem, the Figure ecosystem. Everything that we need is at that dinner table. We don't need to go and eat anywhere else. So, we're very bullish on this relationship. Infineo came into the market with one thing in mind, which is to create a digitally native asset, or tokenize something to the point where you could actually get it purely digitally native. So we needed a use case for that. We chose life insurance. We believe life insurance is the best use case for real world asset tokenization.
And not to interrupt real quick, but when you say digitally native, can you define that just for the audience?
Something that is built around a peer-to-peer product suite that's bifurcated from the real world asset and has a governance model that is defined through blockchain governance versus TradFi or centralized governance. Yeah, so something that is essentially and then the payment rails are also done in a stablecoin on-ramp, stablecoin off-ramp way. So that would be kind of a description of digitally native. Now there's more ingredients to digitally native, which I will unpack for you because I think it's important. There's kind of a 5 ingredient recipe to become digitally native. So you first off have to start with the RWA, so the real world asset. This all has to be built onto a blockchain, right? So you can think about the blockchain here, and then everything I'm about to describe are the ingredients that kind of goes into look at the blockchain as the bowl, so to speak. So to get to digitally native, and I'll kind of build it front to back, you have to have the RWA, which is the real world asset. We chose life insurance. We believe it's the best use case to get to the goal. Then you have to have LRC, legal, regulatory, and compliance. Then you have to create the digital twin. And this is where a lot of people stop. A lot of people stop at the digital twin and they think, okay, now we've tokenized something. No, you've created a derivative. You created a digital twin. You haven't really tokenized something. You're not untethered from the real world thing that you think that you've created. We see this in real estate all the time. Then you need to create the digital asset. And this is where you're getting a backed non-fungible token. You're getting custody and ownership, and you're stopping the double dip, say on a pledge for collateral, right? And again, that's a chapter out of the Figure roadmap that we're taking. A lot of this is what Cagney is doing. And so, why wouldn't we be in his ecosystem? Right? Why wouldn't we follow the best? He's in a lot of ways doing all the work for us. He's spending the money, making the mistakes, and people like us just get to kind of ride his coattails and learn from it. The guy is doing some completely amazing things. Then you move into a digital security, which is the fractionalization. So you have the asset perfection in the digital asset stage, and then you move into digital security where you get the fractionalization, of the asset, and then it goes into, as I just described, digitally native. So no one's talking about this. No one's really doing this. This is a lot of work. Tokenization of real world assets is a massive amount of work. It's not something you can go fast on, but you have to be on the right rails. You have to be on the right blockchain. Provenance is the only blockchain that allows us to do this in a regulated way, in a compliant way, in a way that investors, VCs, and then eventually retail consumers are going to be able to be comfortable with. It took us a year to make the decision to go with Provenance. We interviewed everyone. We sat in rooms in Abu Dhabi, all over the world, with being touted by layer one blockchains, entertained, wined, dined And at the end of the day, it was a Provenance no-brainer. Not to mention that we have people like Anthony and his entire team. We have the Figure ecosystem, and they have, and I mean, I'm not saying this, I'm not here to promote Provenance. It's just facts are facts. We wouldn't be where we are today without them. That's the bottom line. Some of our best ideas aren't our ideas. They were Anthony's, truthfully. And it was just by getting in with the right group of people. There's a vested interest he has a vested interest in our success, and it shows.
Yeah, I mean, I think it's a really cool story. And I think most people don't understand how this all works, right? The fact that if you have an attractive protocol, or I would say a protocol that has really good, strong indications of market product fit, that all the layer ones, all the different ecosystems, or to use the analogy, the Apple stores or the Google Play stores are trying to recruit you to focus and build on their blockchain. So a way that, if you're assessing the success of a chain, it's like, are they getting really high quality protocols? Because those protocols are seeing something in the technology, in the leadership team of the L1, in the support, like you said, that makes them say, yeah, we want to choose this one. It's a very strong indicator.
And there's like a lot of these every other layer one essentially has a bunch of weird stuff in their marketplaces that we don't want to be associated with. I mean, if this is open source and our, say, NFT, and if you think about an NFT, I just have to digress for a sec. Like if you think about what a non-fungible token is, think of a life insurance contract as a non-fungible token. And if you understand really what a non-fungible asset looks like, think about really what life insurance does. It gets very philosophical, and there's no better description of a non-fungible asset than an actual life insurance contract. It's about 70 pages of paper with a wet ink signature. So just kind of think about that for a second. But then, so we have our NFT now minted on some blockchain, whatever E or blockchain S or blockchain A or, whatever blockchain it is. And then now our highly valuable asset is in some random marketplace that someone could go into, buy beside like another weird NFT that could be some meme, could be some pornography, something or other, could be some racist thing. Why would we want to play in that sandbox? Like, really, if we're a serious company, like we're not wanting to, there's a decision that we can make to keep our product serious and not be mixed up in the weirdness of what happens in some of these blockchains.
Yeah. I never thought of it that way, but you don't want to be, you don't want to have your Rolls Royce at Chuck E. Cheese, sort of deal.
Right. I mean, that's the way we look at it.
Yeah, that's interesting. So you guys have had a lot of success, and talk to the audience about what TBL is and how you guys have accomplished so much TBL within your protocol in such a short amount of time. What's been kind of the secret sauce there, and what do you contribute to that success?
One thing only, again, the relationship with Provenance. And I just have to tell it honestly. I mean, Anthony was in my ear. I mean, clearly Anthony and I have got to know each other very well over the years. He was in my ear 6 months before we pulled the trigger on ledgering policies on the blockchain. He was in my ear saying, ledger policy, just ledger policy, mint a policy, just, we can do it tomorrow. And I'm having to go through this process, and we have this roadmap, and I'm like, I know it's scheduled for, he's like, you can do it now. So I kind of heard him eventually. It only took him 6 months to pound me over the head with it. And I went back to the team, and I guess because I'm the CEO, and my team was like, yeah, that's a great idea. Let's go. Let's do it. And we did it. And it was just our community just piled into it. Here's the beautiful thing about the life insurance industry is that for people that get it, the people that own the $4 trillion worth of it, globally, and that's premium that's piled into. That's not face or what would be death benefit. That's a much bigger number. But this is just premium that's being kind of put into it as to further kind of define that economic unit of measurement. Those people are very enthusiastic about what that they own. Those are the owners. Owners of a life insurance contract have almost Austrian economic unilateral control of these assets, and they love that. Life insurance contract is ownership. It can be traded like any piece of property. Sorry, a life insurance contract is property. It can be traded, as such. the community, therefore, around this totally bought into the policy ledger. The policy ledger is kind of the Web 2, Web 3 software that we use to essentially ledger the assets on the Provenance blockchain. So we spun up this software. It took us a bit of time to be able to do it. We're still working on an enterprise level. And now we have some of the largest brokerages and carriers in the world coming to us, knocking on our door saying, hey, can you hurry up and get this enterprise grade so we can upload entire blocks of thousands of policies at once versus, say, tens of policies at once. So our engineers and our devs are working very hard. But the answer, Mike, is community, right? The people that own and understand life insurance at the ownership level, at the end user level, are very, very, very passionate about owning it because they sleep better at night. When you own this asset, you have this sense of peace almost, and a sense of like accomplishment, job well done, responsibility, that you're a good person because people or your business partners or someone is protected. It's a good feeling.
And so correct me if I'm wrong, but I imagine a lot of that TVL is from, I would call the smart money, which would be counter to a lot of crypto TVL for different protocols.
So help me understand smart money, your definition of smart money.
So, for the audience edification too, a lot of TVL that comes from a new protocol traction is often mercenary TVL. It's just to chase listed returns and yield pools or different kinds of incentivization structures, whether it be airdrops or whatever. And it sounds like, your guys' TVL is from educated audiences that understand the product. They're not just chasing an APR or APY return on chain. They're really trying to say, like, we want access to this underlying product, and this is the solution we've been looking for.
Yeah, there's none of that. There's no layers of leverage and promises of APY. I mean, it's just really straightforward taking, and these are all BNFTs essentially, so backed non-fungible tokens that essentially are ledgered on Provenance. These are unit economics of measurement that are baked into and verified by regulators and by life insurance carriers. So this is very truthful, very trusted stuff that's now put on chain. So yeah, there's no building value out of thin air that unfortunately crypto has become kind of synonymous for.
Because TVL really isn't the right metric for what we're doing. Real world assets or assets under administration or assets under custody are closer than TVL. I mean, TVL in crypto means a very different thing than having a mortgage or a HELOC or a life insurance policy or a tokenized treasury on your platform. It means something different in DeFi than it does in TradFi. And we'll get there, I think, but it's not the right definition of the right metric for what we're talking about. But we use it anyway. We
kind of use it, but you hear me keep saying the word ledgered. So I don't use the word TVL to Anthony's point. We understand what people mean by TVL, but truthfully, ledgered at this stage is a more honest description of what's going on.
And how do you define the difference? And it sounds like that's one of your KPIs internally as your team is aiming for success that you're tracking.
Right. So we're not minting trades yet on the Provenance blockchain. So we're ledgering, we're uploading essentially real world inventory is a good way to put it. Life insurance policies with intrinsic value baked into them. And, that value today stands at around $200 million. We achieved that within a few months only. And, truthfully, this is one of the things that attracted me to the life insurance industry, is that the life insurance industry is big numbers, right? Again, this $4 trillion of premium that's being poured into the global life insurance market. In the United States alone, there's a protection gap of $12 trillion. So what that protection gap is that America is essentially underinsured by about $12 trillion. These are people that should own life insurance that do not own life insurance for whatever reason. And this is widely reported by regulators, by reinsurance companies, et cetera. It's a Google search away. So what is the opportunity? The opportunity is to go and fill that gap. That's just the United States, right? Why is that gap not filled? It's because life insurance is misunderstood and misrepresented, I would say. It's not sold well. the story that's told about life insurance is often very misleading. So do we believe that by wrapping it in technology and being able to tell the economic benefits, the living benefits of life insurance, the advantages to use life insurance as a quote unquote warehouse of capital, call it a bank, right? And this is really one of the great use cases of life insurance, is that you're now appealing to the people who want to be unbanked. Now you're appealing to people that are in crypto, that believe in DeFi, that believe in decentralization. I've been using, on a personal level, life insurance as a bank for about 8 years. I've amassed 14 life insurance policies in 3 different countries. It was brutally painful, but my bank, my capital, is warehoused in life insurance contracts. If you think about capital very simply, in very simple terms, it has to exist somewhere. Really, it does. Where do you want your capital to exist? I mean, I want my capital to exist within the constructs and the soundness of the life insurance system. But I want it to be less centralized. I want it to be more liquid. And I don't want to have to go through all the crazy amounts of blood and urine that I gave up to amass my 14 policies.
Can you talk just a little bit more about it? Because I think it's a really interesting use case, and really you're just talking about like the advantage of utilizing life insurance in this way in general. I mean, you say things like you're able to store your money, it's more liquid, like it's debanked. Let's explore those concepts a little bit, because I think they're probably foreign to some of our audience.
Yeah, sure. I mean, life insurance is when I had an exit a few years ago. It's one of my favorite things to talk about. And it was in a food company, believe it or not. I did quite well. And my financial advisor said, his name was Rich. He said, "Cole, you have a problem. You got too much money in your checking account." I said, "Thanks, Rich. I know." I go, "What do I do?" He said, "Put it in life insurance." I laughed. He goes, "Read this book." And he put a book in front of me by Dr. Robert Murphy, who now works at Infineo full-time as our chief economist. And Dr. Murphy wrote a book on essentially using life insurance, as a bank. And I read this book and I thought, well, this guy's super credible. This makes sense to me. This is math. I mean, I'm going to go ahead and now do this. I mean, I went through a whole year of too good to be true. Why are more people not doing it? And what's the government going to do when they shut down this loophole? And I thought, if the government is going to shut down this loophole, I got to pile in as soon as I can. So at least I get grandfathered. So I went on my journey of creating my treasury, if you will, my bank. What I simply do is I take money that comes into my life, I pile it into life insurance by way of premium, and I design the life insurance contract with what's called a paid up additions rider, so that I have a certain amount of overfunding or cash that goes into it. My life insurance policies on average have paid me, again, I get the Sharpe ratio. I get a dividend every year between 5 to 8% compounded. And then I take these policies essentially to a bank and I get them to give me a line of credit against them. They issue it without really even doing a credit check, because they're collateralizing my death, the death benefit. They know I'm going to die. The banks are probably going to outlive me. And guess what my LTV is, my loan to value is on these? In some cases, it's 100%. You don't get that anywhere, right? And I'm receiving 5 to 7 compounded on the dividend inside of the policies. I'm paying, prime plus 0.5 most of the time, right? And so it hasn't been good the last few years on the line of credit, but it's simple interest. So what have I done? I've leveraged take my money out. I go buy Bitcoin, right? That's what I do. I dollar cost average into Bitcoin. I've been buying Bitcoin through this strategy for a very long time. So now what do I get? I get the dividend of the life insurance for $1. I get the dividend of the life insurance contract. I get the Bitcoin. And guess what? I get a whole bunch of death benefit, right? I have one policy that's 8 years old. I put my premium on it is $100,000 a year, right? It kicks back to last year. It kicked back to me $110,000. All right. An additional $10,000, and it buys me about $3 million of death benefit. So what did I get? I got $10,000 tax free and $3 million of death. What did the $3 million of death benefit cost me? I got paid $10,000. But here's the problem. It took me 8 years and a whole bunch of pain and piling money into it, which most people can't do, for 8 years to get that. So what Infineo is doing is we're able to, through creating a secondary market and a marketplace for this on the Provenance blockchain, we're able to find policies, buyers and sellers, where all of that drag is gone. So you're buying these policies fully juiced, ready to go. These are highly valuable assets. So you don't have to pay and put up with all that 8 years plus the blood and urine and the scrutiny and I could go on.
Yeah, no, I mean, I love that story because you have felt the pain point and had to navigate the pain points that you guys are solving yourself as the founder. And that makes you pretty much an expert.
And don't get me it started about life insurance for kids. I wrote a book. I'm not plugging the book because I could care less about the book. But I wrote this book called Child Millionaire. And don't get me started about what life insurance can do for children. And then when you start tokenizing it and getting the value of a human life. I mean, when you start to get really philosophical about this, you have to ask yourself the question, what is the most important asset in the world? And then how do you leverage it, liquidate it, and evaluate it, right? And if you want to get into an argument with me that a human life is not the most important asset in the world, I'll win that argument. I'm going to tell you that it is, right? And most people will agree with me. But then people will say, well, how do you leverage it, liquidate it, or evaluate it? I'm going to say it's been around since 1847. It's the most solvent financial strategy in the world. It's called life insurance. That's what it is. So now we tokenize that. What are we doing? We're tokenizing the value of a human life. That's it. We're tokenizing the most important thing in the world. It's very important what we're doing.
And are you guys, Cole, are you guys going to launch a token associated with Infineo?
We have the Sound token being launched this quarter by the end of this year.
Okay. So it's in play. People can find it. You guys are aiming to be listed on major exchanges, all that.
Figure Markets is the only place you'll be able to get it.
Well, it's a security, so it has to trade on a registered exchange.
Right.
Yeah. It is a security. Yeah.
If you want to check 100%. It out, go on there. And how are you guys thinking about building value? Your tokenomics, are you guys thinking about building value for token holders? What's the strategy there?
We haven't, there's not really a strategy. There's not a lot of tokenomics behind our token. I mean, it's a fractional interest in a pool of life insurance policies with the economic value to it. It's very straightforward. Really, there's not a.
Oh, I see. So it earns sort of a dividend return.
A yield. Yeah. It's a security. So it'll be a step up every year of, 4 to 5%. And basically it creates its own floor. So once it steps up, it doesn't drop down. It's uncorrelated. So you don't get yield curve fluctuations to it. So we don't really have, I'm proud to say we don't really have a lot of tokenomics. I mean, it's basically pool a bunch of these assets that are target life insurance policies into a bankruptcy remote SPV, and then essentially tokenize the pool. This is all done off Provenance Blockchain and then distributed through Figure Markets. Pretty straightforward. No real rocket science to it.
I love it. Straightforward. Guys, this has been awesome. We really appreciate you joining. If people want to find out more about Provenance Chain, if people want to find out more about Infineo, how can they do that? Where do they go?
For us, it's easy. We're in all the usual spots on Twitter, on Telegram, providence.io, provlabs.io. We're here. We're around.
Yeah. For us, just Google Infineo, Infineo. You'll find us a whole bunch of ways. Infineo, Infineo.ai.
Cool. Thanks, guys. Thanks for joining.
Great questions, Mike. Appreciate you, man.